What?
For the first time in a long time, the late day buyers are not rewarded as we're trading pretty good in the red. Mixed bag of earnings, the cause for that, weak China data, couple different catalysts, but we're still clinging to 4,600. We got some earnings stocks to cover, some good, as I said, and some bad. Feinseth remains bullish, and he likes some certain stocks AI related. So we'll have Ivan on at 8:35. This is pre-market prep on a Tuesday.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, let's run down the stock index futures. After testing Friday and Monday's high, we're down 14 and a half handles at 4,600. The buck continued strength. That's up 35 cents at 101.98. Bonds right at 124. That's down about a half a point. Crude still firmly in the 80 handle, but down 19 cents at 81.61. Gold down 1830. That would be your D's gold. Your August gold is looking a whole lot different, and don't ask me why you have the big premium. You're looking at silver here. Silver's down 40 cents at 24.56. Bitcoin under 29K, down $355 at 28,930. Let's bring in Triple D. Triple D, strong close. That rally in the last 10 minutes had me leaning the wrong way overnight. Did you see anything up to that 8 o'clock hour that would talk of a little bit of a reversal?
No, I think it's China, to be honest. I
China.
think we really got hit overnight in China, and we're starting to take leads from elsewhere. Also, Europe down substantially. So I'm going to blame the overseas markets because we really didn't have any major earnings that are driving the bus here this morning. Actually, a couple are actually doing pretty good, some of the major stocks. So I think I'm going to blame it on overseas markets here today.
Okay. Mitch, who are you blaming it on?
Well, I just think like this is just how it's been. We've gotten this pattern before, where a lot of times we're ripping into the close, we come down in the morning, we look all bad, and then we rip right back up. So
where are you guys at? Are you guys still like uber bullish here? You're moving to a
Bullish.
neutral
Look at the
stance?
money just threw out there.
I know. I mean,
I'm
how
sideways.
How could
I'm
I be
saying,
anywhere else than bullish?
I'm saying chop and sideways in quiet markets. I don't think, again, I'm just going to say once we get past this week, this is like what you said, 2,800 companies reporting this week. I think once we get past this week, we're going to enter the dog days of August, and I think it's going to be quiet. So I think it's going to be a little bit choppy, a little quiet. I don't think you're going to sell off substantially. I don't think you're going to rally substantially. I think we're just going to chop around here for August. So I'm saying short-term sideways.
Okay.
I would lean bullish to neutral. I agree with Dennis. There's no reason to lean the other way. But yeah, definitely.
No reason to get full bearish here.
Okay.
No. I mean, it could happen.
Okay, I will just say, and I'll just base it. The exact number is a little bit lower, but I think over the next couple days, leading into some big earnings reports, right? Apple and Amazon, two of the last one, and then we'll see what we get from the retail earnings, right? That's still not down the line. I think it's a battle of 4,600 here. And it's, all the big handles that we talk about. We're back up to the highs from April 22. So I'm neutral to bearish up here. I'll take the other side of the gun. Not out there shorting stocks, not out there buying puts or shorting futures. I'm just saying there's a 4,600 needs to be defended. And right now we're at 4,601. So we'll see what happens. And what, by the end of the day, by the end of the week, jobs number on Friday could shake things up too.
And Amazon, Apple are going to shake things
there
up.
It goes.
I mean, Thursday, we're going to have more information, and that could change our tune here too. So as you get more information, I'm going to say this once again, as you get more fundamental information, not only about the markets, but about macro, but about major companies, it moves the needle. It drives the bus. It'll dictate direction, not only for that day, but maybe for a few days. If Apple and Amazon come out and kill it
Beat.
again,
Yep.
that keeps everybody confident. But if one of them warns, that changes the whole narrative. So as a trader, you have to change your opinion. As an investor, you just stay bullish long term. Tom Lee style, bullish long term. Your 10 years, if your time horizon is 10 years or more, you're buying dips on the market always. It's just how investing works. But as a trader, and my job as a trader, you have to be able to be bullish. You have to be able to be bearish. You have to be able to just think when you're going to go sideways as well. You've got to be able to feel and trade with direction. You've also got to realize, what type of market you're in. So, which directional bets you're making. So I think you've got to be able to change your opinion. And we're going to get information Thursday from Amazon and Apple that could potentially change our opinion. So you got to tune in every day. That's the key. I mean, people reach out to me and say, oh, yeah, you were bearish Tesla, back in, December and whatever. Yeah, but we are allowed to change our tune.
No,
But
that's the important part. You talk about this all the time, Dennis. It's not important about being right or wrong. It's about understanding when you're wrong and quickly adjusting to it. Because as a trader, that's our job. It's
100%. You've got
about it.
Trader. If you stick to the same just bullish theme or bearish theme, you were sticking to the bullish theme all through 2020 and 2021 and 2022. You probably had really bad years. I had really good years then. I'm having an okay year here too. You've got to be able to change your opinion to suit the market environment.
Now, one thing that we just got to be looking out for, the only thing that I think that could change anything this is political landscape changing across. If something happens in China, something happens in Europe, that's the only thing that I could see changing this market. And I think that that's just one thing.
Or if Apple or Amazon warn, that would change it too.
I mean, I expect to hear AI news from them. Let's just be honest. And yeah. I think that will help them out because Amazon hasn't really come out with an AI and neither has Apple. And we've heard about it. I think they're going to tell us a little bit more about that coming up here. And I think that two of the strongest companies haven't really gotten that AI lift. Just get ready. I mean, if they really come out with some good AI products, maybe they could get the lift also.
Anyways, lots of things to talk about. Interesting morning here. So many companies reporting. Not a lot of major companies, but some interesting companies, some widely followed companies. So let's jump into a few of these.
Let's go to Uber as they're reaching profitability. What? Let's talk a little bit about this. Q2 EPS of 2 cents. 2 cents, baby. Beats the estimate of a loss
more than yesterday
of 1 cent. While sales slightly missed at $9.2 billion, estimate was at $9.32 billion. Q2 gross bookings surged to $36.6 billion, up 16% year over year. Uber Technologies definitely the favorite here for ride sharing. Can it keep going?
They could not stop buying the stock ahead of the report last night, Joel. They were just crazy, and they were buying it and buying it. And it was trading like 51. It was up $1.50 last night ahead of the report. And I was like, holy man, somebody's just convicted that this thing's coming out and beating. And then it's funny, on the initial number, they're like, oh my gosh, it's not that good. And they tanked it.
I see
all the way
that.
down to 47.5. And then they're like, wait a second. But they made a profit for the first time, GAAP profit ever. And then they bought it all the way back up to 52.5. So it's already had a 10% range, despite only the 1%.
Out.
It's had a 10% range here in basically that first minute after the earnings report. Those algos, they crazy, man.
Those algos be crazy. I tell you right now, I was not in front of my computer for this report. I would have never have bought. That dip. I wouldn't even have been looking at levels. I wouldn't have been prepared for anything. But what we talked about on the closing print was, man, you got a pair of monthly highs in the 52 handle, 52.03, 52.36 after trading down to 47.50. You're back at this area. I mean, that was like a gift, especially after the daily run that you had. I mean, I don't know. I mean, that's major resistance. If you took something off at 52, you probably weren't too happy when it went over 52.50. That's all history now. I mean, this better stay green today. That's all I have to say. You closed at 49.46. overall they like the report. We'll find support there, and then I'll just do a reset. I mean, if it gets, I don't think you're going to get back up to 52 now
I don't
because
think so either.
yeah, too many people are stuffed. I think 50.5 you got to be out there, 51 you got to be out there, 51.5. I mean, from a daily perspective, I think you got to get out there on the offer side.
I think it goes red. I don't know why, just the spidey
I,
feeling, the spidey senses. I think it goes red. So it's trading up $1 here still right now. There's a lot of people who are uber bullish, and I think that they got the results. They were pretty good. But when you start thinking of context here, the stock was $35 3 months ago. It's 50. It's run
Cha-ching.
a long ways for 2 cents of earnings. A long ways. So I think Uber goes red today. Just my opinion.
You know what the most concerning chart of the earnings season has been so far?
Give it to me.
Microsoft.
That's concerning for sure. But
That's concerning. No, it was
Joel's
one
thinking
of the
something else.
early ones. A stock that had a huge run, made a high of the day. I'll just show it to you. No more guessing. Delta.
Oh yeah.
Have you
Okay.
seen this thing?
I
mean,
know.
but this makes sense, right? I mean, look at that run. I'm waiting for a pullback. I think there's a lot of pullback buyers waiting on the airline.
I think so too. I do
like I'm
think
just like,
that
come
these
down
earnings,
to me.
I think Joel's making a good point though. His point being that this was a classic earnings run up. Expectations so high. The earnings were excellent. The
And
earnings
still
were really
can't do
good,
it,
but they
right?
turned around and they sold it simply because expectations were too high. And do we hit that wall? Are we hitting that wall? Because let's look. The evidence is that that is what has been happening. Tesla's numbers were fine, but expectations too high. Netflix numbers were fine, but expectations too high, and the stock sold off. So this is what we are seeing here now. Even we could segue over into TAP, into Molson Coors, which had a pretty darn good quarter, but expectations were too high for TAP, which we're going to get to here in a second. We might as well go into this because obviously everybody thought that they were just going to eat all of Bud's lunch. They ate some of it, but maybe not as much. And now you're seeing TAP get hit here today on this. Mitch, what were the earnings here? Because this is my point. TAP was running up too. This is the point for the entire earnings season so far, as Joel's point, that expectations are just maybe too high.
Yeah, same thing. We'll do TAP, and then we'll also go Norwegian. I think that falls both in line with this story.
Let's do that.
Let's go Molson Coors here. Q2 adjusted EPS at $1.78, beat the $1.59 estimate. Sales of $3.27 billion, missed the $3.29 billion estimate, and everyone was expecting TAP to just kill it, kill it. And I mean, they beat, but is it really that good of a beat?
I think everybody thought they were going to just have the quarter of all quarters because we know Bud Light, obviously, their loss is probably TAP's gain, and it was a decent quarter. But here you are, and the stock is trading down $3 here this morning, down 4%. Do I think the dip gets bought? I do. I think you'll find buyers beneath here somewhere, especially if they got down to that 65 area. I don't know if it's going to get that low. But again, expectations just too high. So do Norwegian too. Throw it in there because this is all part of the same conversation. Do the NCLH, and then we're going to get Joel to break down the technicals on both of these.
Let's take a look there. Norwegian Cruise Lines coming in with a Q2 adjusted EPS at 30 cents, beats the 27-cent estimate. Sales of $2.21 billion, beat the $2.18 billion estimate, but still not getting the lift.
This is the problem, is that RCL set the bar so high for Norwegian because we know RCL just came out and killed it, man. Maybe that's because that's the cruise that Money Mitch was on, but they rocked it. And
what can I say?
Now you get the bar set higher for the other cruise lines. Norwegian comes out, it's like, well, they beat, but they didn't kill it. What are you doing wrong? Because RCL killed it. And now you see NCLH trading down almost 10% here this morning. Down 9% here right now, simply because the bar was too high. That's what we're running into. We're running into the problems. Even though analyst expectations are not that high, they want to see the companies coming out and killing it, like blowing the analyst estimates away, because beating it is not good enough. Last quarter, beating it was good enough because we were kind of still in the gutter on a lot of stocks. We're not in the gutter anymore. We're not in Kansas anymore. Expectations are higher to be beat by a wider margin. And that's what we're not seeing so far this earnings season. Joel, break down the technicals here because we got some dips.
Wow, got down to 1891, and you've gotten a little bit of a bounce here. Let's see what this low was. That low was 1954. What I'm going to do on this one is I'm just going to look at these multiple lows right here at the 20, let's call it 2030, 2040 area. So if this stock is going to be defended by the bulls, this is going to catch a bid really quickly. I don't think we're going to get up and fill the gap, but I just don't like this area underneath here. I don't care about the pre-market low. I don't care about 1954. I'm just looking at this vacuum that you had between 18 and 20. So I think the bulls got to right away get aggressive and get a bid here. I think this is going to be a teeny bopper by the end of the day. For the Molson cores, down 244. It's tough. I wouldn't be stepping up to buy this thing until I see the same formation that I saw on the upside here. Someone was selling ahead of the report in the 70 handle for 1, 2, 3, 4, 5, 6, 7, 8 days in a row. Let's just call it 70-50. They're like, we're out. We're selling. So for looking for support on this, man, we're under 68. I think the next daily low is 66, but you got to see a better formation, like a similar formation on the bottom, like you did up here in the top before you get serious about getting long this thing.
And I did trade this morning, and I actually intentionally took it through earnings. I had it on last night. It got bid up quite a bit last night. You can see it was even trading like 70-30, 70-40.
Yeah, right there.
I took off 3/4 of the position. I took off a big chunk of the position, and then I held just a little small piece just for fun through the earnings. The earnings report hit it right around 7 o'clock, and I looked at it, and I'm like, I don't think it's good enough. I thought that was my initial thought, was like, the revenue missed. I'm like, how's the revenue missing? When Bud's doing so bad. So then I was like, I don't know. So I ended up turning around and selling it right around 7. I was a very small position, but I turned around and sold it $70 because somebody was bidding. And they're like, oh yeah, it's beat, it's good. And I'm like, I don't think it's good enough. So I sold at 70. I wish I actually would have went short, but I sold my long, and I pretty much was high ticking it after. It traded a little bit at 70, 69, 90, 70,
Not
right
much.
in there.
Yeah.
Not much, like very small. And again, I was very small on that because I don't like taking stocks through earnings, but I was like, I take a little piece just for fun through the earnings. And lucky, that I made that call. It's just like sometimes earnings interpretation, you can make some money interpreting too. Like you're thinking expectations higher. My thought process was, yeah, it's a beat. They beat pretty good on the bottom line, but a revenue miss. Like, I don't think they're going to like that. That's why I turned around, sold the long, and I wish I would have went short.
Yeah, I don't know about TAP. I definitely would probably stay away from this. I know that it's gotten the lift. It's gotten 40%. Even if it does get some buy the dip in here, is the Bud story still the same? I don't think it's still the same.
Well, the other
thing.
problem for TAP, Mitch, it's a consumer staple, and we know,
Exactly.
like, I've been hating on consumer staples.
Then growth.
There's not the growth here. And the second thing is the Tina trade, the lack of, there is no alternative. No, there is an alternative, and it's called T-bills, and it's called 5%. So, I mean, that's not working in any consumer staples favor. And maybe we should segue this conversation just to, not that it's a consumer staple, but to healthcare, Johnson & Johnson, because we talked about this stock yesterday, and I'm like, it's trading with a pretty high multiple for having all these lawsuits, hanging over it. So we were talking about when it was 171 on pre-market prep yesterday. Interesting enough, Kramer, I guess he likes our pre-market prep content, he turned around and he sold his J&J. He said for years, said last time Mad Money, he sold his J&J because he's worried about the lawsuits. And I'm like, this is what I'm worried about here too. So you could have heard that 10 hours earlier on pre-market prep. But I mean, it was, investors are thinking like that. And here's J&J down another $1 again. I know people are coming in and saying, well, J&J is going to eventually go back up. It might, but we can't quantify these lawsuits. And if you listen to yesterday's show, I'm very concerned that this number is going to be much higher than the $9 billion that Johnson & Johnson had set aside for it. I don't think it's going to be $700 billion, but I think it's going to be much higher. And I think this is going to weigh on the stock. And then you talk about treasuries at 5%. Why come into a Johnson & Johnson sitting around for 2.8% dividend when you got treasuries at 5 and take on that kind of risk? So Jim Cramer, I think, is absolutely correct to have sold this stock. I said it yesterday. I am scared of this stock being long this stock right now at 171. It's now 166, 5 points lower from our conversation just yesterday. So haters, we got this one right. I think we're going to continue to be right here. I think you got to sell rallies in J&J. I think this could go a lot lower.
Where
This is
where do
why
you go? Where do you go for support in this one? Like
Yeah.
Down
like
to where it went before earnings to the 157. And it could be a short visit there. Like we could be there in fairly quickly. If there's another headline, and again, we don't know. And this is going to go on for a long time. This is not going to get solved tomorrow, next week, probably not even next year. This could weigh on the stock for years because they thought they had the solution when they were going to spin off. And we gave this conversation already, so you guys, if you listened yesterday, already know it. But they thought they had the solution. They were going to bankrupt that certain portion of the company at $9 billion or whatever, 8.7 or whatever it was, set aside for the lawsuits. It's not enough money. That's what I'm telling you right now. I don't think it's enough money. I think it's going to cost them a lot more than that. That's why I don't want to own stock.
What I wanted to say was that Kramer also admitted that he misjudged the severity of this litigation. And I think that, Dennis, you've been on top of this from the very start.
I said
you
you don't want to
definitely
own,
said this has a lot of warning signs here. And then when Dennis saw that 18 million, that definitely put him on alert. He was just like, yeah, no, come on, man. If this guy's going to get 18 million, who knows what's going to happen in this situation? And that alone is also the reason you're seeing Kramer make this, is he just doesn't know what's going to happen.
Nobody does. That's the biggest problem.
The problem. That's the risk.
It's huge risk. And it's not like you're getting J&J at 3M 11 times earnings.
Cheap,
I mean,
yeah,
they've discounted it a lot. So you start thinking about like, holy macro, man. You start thinking about like, this kind of money and this kind of, the multiple's not that cheap. I'm like, there's just safer places for your money. J&J, for the first time in a long time, is not a safe place for your money. That's what I'm going to say today.
That's a good way to put it. Yeah, and just definitely, if you're looking for, I can't give you anything. I see that low at 161.30, but I don't think the expectations are to get back to that area today. I think you just got to keep eye on the closes. And right now, if you get a look at 167.53 at that area, I'll call that pretty good resistance for now. J&J trading in the red by almost a stick.
Yeah, I see a big head and shoulders on that monthly. I wouldn't touch it. We'll see what happens.
And it's down today because Kramer said that last night. It's down today because Kramer said he featured it for 5 minutes at the end of his show, and he said it's a long time holding, and I've sold it. It started selling off right at that time. You can look at 6:55 last night was the time it started selling off again. They're like, holy crap, Jim Kramer thinks this is bad too. I mean, you love him or hate him, but he's got weight. And he just spoke to, hundreds of thousands of people saying, I've had this for years. I don't want to own it because I don't know the risk. Same thing we were saying 10 hours earlier. Obviously, pre-market prep doesn't have the weight that Jim Kramer does. But I mean, we're a lot of people coming up with the same conclusion here. This is risky.
All right, let's keep going. Let's get into other healthcare stocks. We'll put these together really quick. Let's go Merck and Pfizer together here. We'll go Merck Q2 EPS, $2.06, a loss of $2.06, beats the loss of $2.17 estimate. Sales of 15.4 billion, beat the 14.39 billion, and they revised fiscal year 23 revenue guidance to 58.6 and 59.6 billion versus a consensus of 53.18 billion. So that's looking good there for the revenue. The prior guidance is definitely getting lift. Also, adjusted EPS outlook getting lift here for Merck.
What was the other one? Pfizer going to do with the two?
Pfizer. Yeah, let's give their numbers really quickly. Q2 adjusted EPS at 67 cents, beat the 57-cent estimate. Sales of 12.73 billion, missed the 13.17 billion estimate. They revised fiscal 23 revenue guidance also to 67 billion to 70 billion versus a 61.01 billion. So you're seeing definitely revenue guidance going up for Pfizer and Merck here.
I own Pfizer, you know that. I had Merck in my portfolio for the better part of a decade, and I sold in the last year just because I felt like it's just not, valuation getting a little bit stretched, but not still cheap compared to like Lilly and stuff. These are both dirt cheap. Been wrong on the Pfizer because obviously I underestimated the impact that the lack of, COVID shots, revenue here was going to hit. I think it's come down far enough like that it's discounted a lot of that. I still, do you still own Pfizer? You still own Piece 2, don't you, Joel?
Yeah, I'm in both of them. I like to sell both of them.
Both been kind of dogs.
Yeah, no,
Yeah.
well,
Just not
no,
going anywhere,
well,
right?
the Pfizer. I mean, I'm not too far off my entry, so
And this has been
it's
a
not a big
horrible
deal.
year, at least for
Yeah.
Pfizer, for sure. I mean,
The Merc, I bought this thing bad. I remember I bought it like in these pops right here in early in late 21, and I wrote it down. But the thing about this one is, and I'm looking at the Pro right now. It like right when it was trading in this area, you got all these like price target raises and buy, and either there was actually a buy rating, and I was just thinking, man, oh man, you're buying Merck here up at these levels. So a little bit shorter. I mean, I just don't like the chart, especially if this takes out the support at 105 and a quarter. We're still $3 away from it. You're getting a little bit of a bounce. But the next daily high, I mean, I think you got paper. Like we are at 108. That's one daily high. I mean, if this thing, I don't know, sellers are coming down in this one. If in fact you could hold 108, the next daily high is 108.72. But this looks like a tired chart.
yeah, tired
Again,
chart,
I
of
don't know if I want to
course.
own these stocks. Sorry,
No,
Mitch. I was weird.
No,
Both
no. I
times. Same
mean,
thing.
I
Go ahead.
agree with you that on the COVID operational revenue growth, things like this, it just doesn't look like a stock that I want to own. And Merck is a little bit better, I think, on the monthly. You can see it holding up, and that's why I
hmm
would probably, if I wanted to have one of these, I'd probably have Merck just because it's holding the trend compared to Pfizer. And that's what I would say is I would stick to it as long as it can keep holding that monthly trend on Merck.
I think Treasury's way on these two, though. I'm still going to keep saying healthcare, drugs. Yeah, I've got a little bit of healthcare in the long-term portfolio. I'd rather almost be XBI at this point, but
Yeah, that might make
it's
sense for sure.
well, you get if you're going in, I'm taking market risk, and don't kid yourself. The market gets ugly, everything goes down, but healthcare is defensive. I just feel like I'm just not. The only reason I'm taking market risk is if I'm getting really big returns, and I just don't think you're going to get that in Merck or Pfizer for
that's a
that
good
matter.
point. Yep.
Well, it looks like, I don't know, maybe it's all AI tractors because Caterpillar continuing going here. Q2 EPS here at $5.55 beats the $4.51 estimate. Sales of 17.32 billion beat the 16.5 billion estimate. Adjusted operating profit margin was at 21.3% for the second quarter of 23 compared
Wow.
to 13.8 for the second quarter of 2022. So, like I've been saying the cat's out the hat, man, and keep on going.
There is no recession in construction right now. And to the point that I made a little while ago, which I had missed obviously on the home builders, it's just like people put off doing projects when the prices were high. They're now bringing those projects back in, and it's getting busy again. It's why I did my shop. I put it off for 2 years because lumber prices were too high. Lumber prices come back in a little bit. I'm doing the project. So prices of stuff, as it's funny, as we do see some deflation in certain things, like not so much steel, but lumber has come down significantly in other things. There's more projects happening here now again. So that kind of fuels it. And we know interest rates, that people are just finding a way. You think interest rates are higher, it's going to be less people to do stuff to do, but they find a way. So, I think the construction industry is still booming. Caterpillar is still booming. With that being said, stock was $210 back in June. It's $268 here now. It's been a hell of a run. At this point, if you're buying it now, you're chasing it.
Oh, yeah, for sure. I mean, if you get a look at this 270 area again, 270.33 is a high. I can't think about buying this stock. It's breaking out to a new all-time high. I'm not necessarily shorting it, but man, up $3. Keep an eye on there probably some large paper in the book at 270. That's probably why it stopped at that area. If you're buying this thing off the open, you want instant gratification. You want to see a
Yeah.
270 bid. Why are we falling out of bed here? It's at a pretty steady decline. Have we seen
Yeah, it's just a steady
any
decline.
I
yeah,
don't see anything really helping us here. This is why we're falling out of bed, because if we look, and the earnings that we have had have been pretty good, but some of the stocks, they're up, but then you get Norwegian, it was pretty good earnings, but expectations too high. It is a teeny bopper now here, Joel. But just right across the board. And then you got Europe, which was down overnight. You got China, which was down overnight. You got a lot of reasons to just keep taking profits here. I did too. I mean, we know on Friday I was nervous. Friday morning I took a bunch of profits in everything. SPY is still kind of the same spot. It's a little bit actually down from where I was selling stocks, but I tweeted it out. I sold all of my General Motors. I sold half of my Airbnb. I sold half of my AMD. I sold something else. I can't remember, but the 4 stocks. So I took, and that's a pretty good chunk. So in my long-term portfolio, we're talking. I just, feel like some of these stocks have run pretty far. So it's kind of like profit taking. AMD may be the exception, but it's just been meandering here for so long. I was like, I'm just going to sell half of it. So it's been a pretty good trade. We're in at like 93. So sell half and I'm going to hold the other half. So
yeah, I can see a
but
little
General
topping.
Motors. Sorry.
No, I can see a little topping also. I wanted to show on like XLI, and you can clearly see that there on the daily. I think Joel would he'd give us a nice little level there to
Oh,
kind of look
yeah.
out for. And I think that this is one that kind of shows you a little bit of some topping action in those industrials like Caterpillar, Deere. I rode the Deere trade from 400 to 440. I got out of it, and I'm looking for it to come right back down, to 420s, and I'll take it again. I mean, I have no problem taking this trade again. The key is getting in and out on these trades. And that's what I've learned a little bit on these industrials. They love to give you that rip on the daily, but then they also give you that heavy pullback that you've seen in the last couple of days. I'm looking for a little bit more.
Wouldn't be rushing out to buy this at 420, but let's see. That's getting a little bit of a sympathetic move for your Deer traders out there. What do I not much? Is it anywhere near 434? Now, for a lot of these stocks, I mean, you got to look at yesterday's highs as pretty good levels, and then if that's so $2 away, 432.89, and if it goes red, 429.60. I don't know. It's a tough chart here on Deere, but I don't know. I don't think I'd be rushing out to buy it at 420. We just nicked yesterday's low here, Globex low at 95 and a quarter. So going to 93, trying to catch a little bit here, going into the open. Where else
Joel,
we go? We got
something
more.
you say too just before we go. I want to talk Tupperware and a point you made a while ago when this was probably a few months ago, but you ended up being correct. And then we actually were weak for a month or so after. When you start seeing these rallies and, these smaller short squeeze zombie type companies, and they're just like buying, just irregardless of price, I'm just getting in because I've got to be in. And I mean, this Tupperware TUP has just been blasting off here because it has a high short interest. I mean, Herb Greenberg, props to Herb. He's been talking about, just giving him a shout out there. We know he's a great guy. Herb actually, has been talking about this and just, calling it out like it's like ridiculous that things going $1, $2, $3, $4, $5. And these things can continue to squeeze like this. But typically, let's not just talk Tupperware, but talk in the context of the overall market. When you see excessive speculation like this, it's more historically the sign of getting towards the end of the market where people are reaching to just find something else that hasn't gone. I'm going to buy the bankrupt company because everything is not the Tupperware is bankrupt, but it's close to it if it's not. I mean, I'm going to buy, this because I've just got to be in stocks and everything is going to go up. But typically when everything starts going up, you're getting more towards the end of the cycle as opposed to the beginning of the cycle. I think the second half is going to be a lot more challenging for the bulls than the first half was. And I think it's signs like this with Tupperware, where we get this excessive speculation happening, that makes me even more nervous to be all in on stocks.
It just shows me more and more the bubble environment, right? I mean,
yes.
This is that type of environment where you're seeing stocks. Doesn't matter the fundamentals. It doesn't even matter the technicals. It's just more they're just coming after it. They're coming after it and just lifting it at all means. And then you see the traders out there right now. How are the lower penny stock traders right now? I can tell you because we have a lot of those like in our live trading, and they're all looking for them. They're like, when's the next runner? What's the next 100%? Where's the next 100%? They're not looking for 10%. They're looking for 100% movers. And so I think we need to keep watching this and look to see when we finally get some of these to get wrecked. What do I mean? I'm not saying that it's going to happen today, but eventually these are going to have some heavy pullbacks. And that's when we got to really kind of be on alert.
Before we go to Ivan, just to comment on this, really not going to comment on the pre-market or like the long-term price action. These are when stocks go into these kind of modes, I really like to keep an eye on the volume. You know, big volume coming in on the up day a couple days ago, and then they had a down day, not as much volume. Another big volume up day. So you're going to keep having to find more buyers and buyers and buyers to keep it going. So once the volume starts to either taper off or go down, then you get a little bit of a consolidation. Then maybe you're running out of buyers on this one. But trading up $1.03 right now at 530.
All right, let's get out of the markets right now. Let's continue talking about what's going on, of course, in different areas in tech. Of course, the AI seems to stay strong. Will it break? Let's find out. Let's talk to our guest today. Let's get to the action.
All right. Good morning to Ivan Feinseth. He is over the CIO over at Tigress Financial Partners. And Ivan, you probably didn't like our talk earlier in the show before you came on because we were talking a little bearish. Why don't you come in here and hit us upside the head and talk about the good things going on in the market?
Well, in the past few times I was on in March, I was on in May. I was very bullish in March. By the way, I was talking about the fact that when the market was struggling, you had industrial stocks leading the market higher. That was the sector that was doing well. Caterpillar, Deere, and a few of the others. And I said at the time, you cannot have a recession if the industrial stocks are leading the market higher. They are the most economically sensitive group. So we're seeing the results of this soft landing, no landing, the bullish narrative of peak Fed, deflation, no soft landing, no landing, and to me, Powell may be back to being the best Fed governor ever. When they say don't fight the Fed, maybe Powell was on our side all along. People said he was trying to talk down the market every time that we'd have a post FOMC meeting, and he would. The market would rally and he would start to speak saying higher for longer. The Fed's got to be aggressive in fighting inflation. And he's really been a friend to the market the whole time. And I think we are going to end the year above 4,800 on the S&P 500. And look, we got a recovery in earnings coming in the second half of this year. We got inflation is on a strong downtrend, maybe not as fast as the Fed would like, but the CPI is at 3%, down from its peak of 9% a year ago. And I think that the Fed, with this last rate increase that we saw on July 26th, I think that they're done. They're going to, take a wait and see, data-driven position. But I think everything is working, and I think we're pretty much done with the Fed. And now, while S&P 500 earnings are supposed to be down around 6 to 7% this quarter, they're going to be up about 1% next quarter, and as high as up 8% in Q4, and then things really take off again in 24. We know the market's 6+ months forward looking, so I think the trend is higher. You got $5.5 trillion in money market balances on the sidelines. You got a massive need to unwind very bearish positions. And you're going to have this FROMO catch-up trade from all these managers that have underperformed so far this year. And even, Tina, back to there is no alternative. Even with 5% money markets, as high as 5% money markets, the stock market's up 20% so far this year on the S&P. So I think all points to green lights, and I think the S&P will exceed 4,800 by the end of this year.
All right, Ivan, let's talk a little bit about what we're seeing, right? Of course, we have AI that's really come into this market, and I refer to AI as sometimes like there's like hype AI and there's like real AI that's going to show up on the bottom line, right? I think that this is what investors need to be thinking about now as they're going for AI investments. What are you seeing in different spaces, maybe like software, infrastructure? What are you seeing in AI? Where is it really going to come into play, Ivan?
Well, I think that companies like Microsoft, Google, Amazon are going to be leaders in the AI revolution. Then you got companies like C3 AI. And to quote Tom Siebel, from the founder of C3 AI, every company is going to have to be an AI company. You're going to have it used in pharmaceutical for drug discovery and analysis. They're even talking about Caterpillar as an AI company, and Deere. I saw 2 years ago at the Consumer Electronics Show a demonstration by Deere of a fully autonomous equipment. There's actually a shortage of farmers. The kids just don't want to be farmers anymore. So farmers are going to have to use technology to increase crop yields and make up for the shortage of labor and this more mechanical revolution, industrial revolution in farming. The same thing with Caterpillar. Even they're talking about Ingersoll Rand, one of the largest manufacturers of compressors and vacuum pumps, as an AI company, if they're going to be able to help improve mechanical technology. And almost every machine in some level has either a vacuum pump or a compressor in it. So it's going to be prevalent everywhere. And like Tom Siebel said, every company is going to be an AI company, because companies are going to have to use AI to leverage the value of their data. And it's going to have to be custom applications, because those will become companies' competitive advantages. You're not going to be able to buy shrink wrap off the shelf software. And this is why I like companies that enable you to customize AI tools like MongoDB and Monday.com.
There you go. Those are two names definitely to keep an eye out for. And I've been also keeping an eye out, especially I like Monday.com. I think stocks like this that are in kind of the HR space and things that, already are usually run by one or two people. This is where AI could really come into play, right? Because now you could really have one person kind of watching the AI, and the AI itself could run these departments. And I think that moments like this is where I really see something coming into the industry and completely changing the stock. So Monday.com definitely on my radar there. Ivan, I can't blame you for mentioning that one. Let's keep going here. I think Joe has the next one for us.
Well, I just want to ask you, what do you think the overall impact AI is going to have on employment, right? If all these machines are, you got the shortage of workers.
It's going to have a great impact, because
Is there
AI.
anything negative about AI?
Well, yes, we all love the talking computer and the self-driving car, but we've all seen Terminator, so we know how it could end.
That's what I'm worried about, the Terminator scenario.
AI is not going to take your job. A person using AI is going to take your job. It's just like I've been talking about Adobe and AI for months, and now another firm just upgraded Adobe at this level on their AI initiative. But AI is not going to take the job of a graphics designer. A graphics designer using AI is going to take the job of a non-AI using graphic designer, and you're going to see the skill set rise, and with that, incomes rise, because it'll be more technical and it'll be more value added. So it has a positive impact on employment, because it will help raise skill sets and raise compensation levels.
All right, I want to ask a little bit of something different now. Of course, we saw Tesla mention on their recent call that they could potentially license out FSD and things like this. And of course, I've been keeping an eye on the LiDAR plays for a long time. Who wins here, Ivan? I know that you keep up with a lot of technology advancements. What do you think wins here?
The best
Mobileye.
This is Mobileye. Mobileye is the pure play in camera-driven ADAS and eventual autonomous technology, full autonomous technology.
And how long do you think that comes into play, Ivan? When will we actually start seeing consumers actually adopt this?
Well, it's being adopted. There's Mobileye on a lot of vehicles. The value added level is going to go up. Right now, the average ticket for Mobileye may be around $55. It could go to $2,500 per car, especially as all of the automakers are increasingly talking about their focus on not only making money selling the car, but making money on ongoing software and subscription upgrades and infotainment connectivity. So all of these add-on services are going to be part of what you pay for your car and the service it provides. And Mobileye is a key component, and they focus on camera-driven technology for ADAS and autonomous systems.
Are there any sectors that, and I'll just go back to this again, that are not going to benefit from AI, that are going to be hurt by AI?
Overall, it's going to help. It's going to be a more company by company than sector by sector, because they're talking AI for healthcare, they're talking AI for industrial stocks, retail, for example, being able to monitor consumer behavior on your website to help optimize pricing, such as airlines or cruise lines. So it is going to help at every level, every company. And again, it's a tool, and how you adopt it and how you use it to add value will impact a company's fortunes and stock price.
Our path to 4,800. I mean, this has already been just a very nice move up. We're pausing here at 4,600. Where you're looking, is it, we're going to get this a sustained bid here and just crawl our way up, or do you expect it just to be, like Dennis mentioned earlier in the show, he just doesn't know if it's going to be as easy sledding in the second half of the year as it was in the first half of the year? What about the nature of the course to 4,800?
We're going to see probably, the market consolidate its moves, and normally August and September are kind of choppy months. We could maybe see a little give back if we see, there's maybe unforeseen events. But overall, I think you could see some sideways and consolidation in August and September, and by late October, a pickup and a rally in the last quarter.
All right. Always great to have
November, December.
Always great to have you, Ivan. Definitely good to have, of course, Tigress Financial Partners. You guys can check them out. I'll throw up a link here so you guys can check out the website, and always follow Ivan. A good follow on Twitter. It's good to have you on, Ivan.
Thanks.
Ivan the Wonderful instead of Ivan the Terrible.
Thank you.
I like it. Well, see you next time, Ivan. Let's get back to the markets. How we looking, Joe?
We're leaking.
The leak.
The leak
Come
continues.
on. Yeah. It's just a change in tone, and just go back to last Thursday. The old key reversal. We were there. We were done. Market just faked everybody out on Friday. Monday, was
Now we're
a
leaking
little
again.
bit of we came back again, but it just, I don't know, it just right now, it seems like there's just a little turn in sentiment, right? From this rah 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 to like a little bit of caution in the market. But what a difference!
But why would that come, right? Well, because the big boys are coming on Thursday. I think everyone's a little.
I think
bit,
it's profit taking ahead of some of these reports here too.
Yeah,
Because why did I sell half of my AMD? Multiple people ask me that. Because I'm kind of nervous to take it through the report, because I feel like expectations are a little bit high. Nvidia's set the higher bar, and I'm like, I still want it. I still think long term this company is going to be higher, but short term, it's been a pretty good run. It still came from $90 3 months ago. So I mean, I think expectations are still maybe a little bit. It's still a little bit too high. Last quarter wasn't great for AMD, but they bought it just because they went into this AI bubble and they started buying everything, which we kind of thought that they would do, and we were paid for that. But at this point, it's like, a lot of good news is priced into a lot of stocks. So, is it to a point here where we should be taking some profits ahead of some of these reports? I think it's prudent. So, I'm looking at what reports this week. It's not a coincidence. I sold half my Airbnb because, it reports Thursday. And I'm like, I'm a little nervous to take it through the report. So I think you're going to have actually, where we've had run-ups, into these earnings, and that historically has worked very well. Maybe at a certain point in time, you get a day or two, or you get right before these reports and people are like, I don't know. It's not as easy going. It's not as easy sledding, maybe, like you were saying in the second half, and I was saying. So I just think it's prudent to maybe book some profits here.
What's another stock that people or the investors look to be coming out of off the good report is this Meta. It did have the gap and go. But I mean, there's someone firm. They're like all day long. We're selling this at 325, 326. It's just like one of those unlimited orders. Now you back $10 off there. Will they form a similar wall at 320 or 321? But I probably maybe keep an eye on Meta. It had the gap and go. It's done it on the dailies for 2 quarters in a row where it had the gap and go, kept on going. I don't know. This one, I think you got a better chance of filling this gap in this one down in the lower 300 handle than you do blasting off to 350.
One thing I'd keep an eye out for is stories like Marriott, right? Let's talk about this. Yesterday, I sold my Hyatt position. Why? Because I
Good.
didn't know what was going to happen on Marriott, right? And the reason why I sold Hyatt is I already had a nice little lift and Marriott's earnings coming through. We don't know what's going to happen, right? These stocks have run so much that the bar is high. So I
Yes.
got out, and perfect example. Now you're seeing Marriott get hit on good numbers. Let's take a look here. Marriott Q2 EPS, $2.26 beats the $2.19 estimate. Sales of 6.08 billion beat the 6.05 billion estimate. They do see Q3 adjusted EPS to $2 and $2.09 versus a $2.03 estimate. And also full year 23 adjusted EPS to $8.36, high end of $8.65 versus an estimate of $8.36. So fundamentally wise, this all looks great, but yet getting the pullback.
This is the theme. We've had the theme here this earnings season. It's taken a week or two to figure it out, but the theme is good numbers. They're beating analyst expectations, but they're not beating investor expectations. And what you're seeing really has been the theme is that they're initially maybe popping on these earnings and then they're giving it back because investor expectations are simply too high. And that's a problem. That's a problem for this market.
All about hold at 200 for Marriott here. New all-time high yesterday, new all-time closing high. Yesterday's low right in this area. So the Bulls got to make a solid defense of 200 or else things are really wide open. I could see a pair of daily lows at 192.5, but Bulls, you better get out there and defend 200 in Marriott.
Airbnb is one I'll be careful of. It's already gotten up there towards a resistance level. I see around 152, important level to kind of keep an eye out. And I'm seeing Marriott come down here, Hilton come down. Airbnb's been running with this. Be careful now. It's seeing a little bit of some pullback coming into Airbnb.
It's prudent, and like I said, I've sold half of it. It's prudent to maybe be taking some profits. I mean, Airbnb, I picked it up at 110. It's 150. It's 40 points in 2 months.
That was last quarter.
Stock.
You did that off the last report.
AMD and Airbnb, I did the same thing. They were disappointing earnings, but I'm like, this bull market continues. I'm just blindly buying the dip on the earnings, and it paid. So
especially on quality stocks.
It's just different now. It's different now. So they're names that I don't know, like
you didn't go in the ditches, but
names that are widely followed that are likely to get bought last quarter. But we're just in a different environment here now. I'm just going to keep saying it. Investor expectations are much higher than they were last quarter. Even if analyst expectations haven't caught up, we can clearly see that investor expectations are higher. Tesla, Netflix, all the examples that we've given through this show. And that is a problem. I'm not saying we're rolling over and this bull market is over. I'm just saying it gets tougher going forward.
JetBlue struggling today, of course. JetBlue Airways Q2 EPS 45 cents beat the 40-cent estimate. Sales of 2.61 billion in line, but they're starting to put out their EPS, and this is not looking good. Third quarter 23 adjusted EPS looking at a loss of 20 cents to just break even versus a 40-cent in the green estimate. So definitely not what you want to see. A company telling you that they're going to go under profitability, right? They were at profitability, and then now they're really going to get hit. So that's where we got to be careful here as JetBlue slashes its 23 outlook and warn a potential loss of its current quarter. And this is really going to probably make an impact on airlines today, as you see in the hit come in.
Yeah, what a disaster considering how good UAL and Delta and American was pretty good too. I mean, now
even Love was coming back, but this just shows you where the best of breed I think are in the airlines right now, and it's not Love, it's not JetBlue, it's going to be in the top three, right? American, Delta, and United. I think if I want to be in any airlines, those are the ones I want to be in, and definitely don't want to be in JetBlue right now. They're also getting hit with their how they got rid of the American airline partnership for the North West, and so that's also playing in a factor on JetBlue.
Down substantially here. Man, at just between 7 and 750. I mean, I see one daily low here. So I think if you want to be patient on this one, and you want to try and cover short or look at a potential long, I think you might maybe not necessarily today. Multiple lows under $7. That's 32 cents away. So that's the area to take a look at for JetBlue. Coming back on the upside after this kind of report, I'm sure a lot of people would like to see the close, which was near the low. That's interesting. 772 was your low, would fill the gap. 40 cents away. I don't think you're going to get that gap filled today in JetBlue.
We've been talking negative today, and I kind of we could keep that going, but I want to change things up a little bit. Let's go to a Hoch that's at least in the green today.
Sure.
That's OSK. If you guys don't know the ticker, Q2 adjusted EPS at $2.69 beat the $1.57 estimate. Sales of $2.41 billion beat the $2.21 billion estimate. And this one doesn't look bad at all. Of course, this is in farm and heavy construction machinery. We've been seeing that get the lift. And now this is starting to play catch up. I kind of like this, especially if it can get back above 100. Right now, I'd probably give it a little chance, but 100 seems critical.
Yeah, psychological level always when you get to the triple digits. So you naturally think that's where it's going to run to early resistance. You can take that out, then you start thinking higher here. I'm not chasing today. It's just a tough day. Yeah. So, I don't ever chase, and I'm definitely not chasing on a day like this. But, some cases it pays to chase. I mean, that Roku move, like I cannot believe that Roku move. And I thought, it was going to struggle up at 78 or 79. It cut through 80. It cut through 90. It's thinking about 100. That's a squeeze.
That's a squeeze.
There's a squeeze going on there too. Yeah, that's unbelievable. So
it's momentum stocks, right? These are momentum stocks. They
names
love
that everybody knows. Like Oshkosh, nobody knows that name, but everybody knows the Roku name. So I think, it's a little bit of a different animal here, but you get the momentum cutting through, you've got to be aware, and if you're, playing at a resistance point, when resistance gets taken out, that's called a breakout.
Isn't this the overalls maker, Oshkosh?
No, they make vehicles.
But that's pretty, the Oshkosh Kabosh. Oshkosh
Bagosh, yeah.
Oshkosh Bagosh, is that what it is? Oshkosh Bagosh?
Yeah, you used to have the overalls, but you wouldn't have the straps up. You would take the straps down and put them at the side, and that's how you would wear the overalls back in the 70s and the 80s. If this thing got, I know you're talking about buying it over 100. If this thing got anywhere near 101, 104, that's a gap fill. I'd be a seller there. Have absolutely no idea where to buy this one. Top of yesterday's range is 92.29, but getting into the gap area.
Of course, they're supposed to get their ramp up of the USPS trucks in 24. So long-term outlook for Hoch, that does look good. That's supposed to come in a ramp up in 24. Just kind of stating long-term there for the stock. All right, let's finish up with Zoom Info Technologies, as this stock just takes a beating today. I think it was down about 20%, maybe might be a little bit under that now. Wow. But Q2 adjusted EPS at 26 cents beats the 23-cent estimate. Sales at 308.6 million, missed the 310.33 million estimate. And the EPS outlook really wasn't that bad. So they just completely hammered this. On revenue outlook was a little bit lower with a 309 million outlook versus a 325 million estimate, but definitely just getting crushed.
Huge super duper support at 20 to 20 and a half. That's right where you are right now. It's the natural area you would think the stock would bounce. It's not the day to report disappointing earnings. So that is the one concern. Remember, support is support until it's broken. So I'd say if you're trying it there, you definitely got to hold 20. You start taking out 20, and then you start getting concerned. So if it could bounce at 20, you could pull a Snapchat and bounce off that level. I mean, Snap had such a hard level at 10. It bounced right off of the 10, which we predicted. I'm a little bit more spooked on this one. Just simply, it's a little bit smaller, not as widely followed. And the support isn't as well defined, but it's pretty good support.
Also, I mean, if you're looking for this from the perspective of if you shorted this thing, a rocket ship a little over a week ago, this thing traded 30, and now you get a chance at 20 or the lower 20 handle. I mean, I don't know what kind of return that'd be a very good return. I'll stick with you on the technicals on this one. Someone slammed it down to 1905. I don't think you get there yet today. There's a little bit of panic. If you're looking for some kind of follow through on the upside, since you reached that depressed level, the high of the rebound has been 21.43.
One thing before you go, I just had Spinner messaging me on Twitter. Spinner, longtime listener in the chat, one of our first listeners from 9 years ago when we first started the show. Great source of information as well. Spinner just saying, hey, just pay attention, because he's not in the chat today, but he said, just pay attention to TLT today too. And I'm like, you're right. TLT getting hit here once again quietly. And we talked about this a couple days ago, but quietly
Bonds
the
lead,
TLT
right?
is trying to make a new 52-week low, or at least a 2023 low, not quite to 52, because October got down 91, but it's trying to make new lows, the TLT, and that is concerning for the overall market. We know when the TLT started to break down back in July of last year, that was, the precipice for a significant stock market sell-off. This TLT now well below $100 is a concern.
Uh, you know,
Definitely.
I talked about this before, and I don't know if it was before the last Fed meeting or whatever, but it didn't work. The market kept on blasting. But man, bonds were a really good indicator. The TLT when it hit those lows in October, and then I remember the 30-year just hitting a wall at 134. Now we're quite a ways off that, but good thing to point out. I'm going to leave you guys. We're down 20 handles right in the area of yesterday's low. So if the Bulls want to get a little sympathetic rally here, get it above that, work our way back into 4,600. I'm still going to keep an eye on that level on a closing basis. So great job today covering a lot of earnings, and great having Ivan on. And
Yeah.
be back with you guys later on. Going to have Christian Fromhertz join me on the closing print today to get his appraisal of the recent price action.
All right. Thank you, Joel. Like always, you guys can keep up with Joel on Premarket Prep Plus, and we're going to start wrapping it up here. One stock that just caught my attention, and I wanted to hear Dennis' reaction to it. What about good old Nicola?
Nicola. This is what we were talking about.
Man.
Tupperware. Same thing.
Yeah, same
You're
thing.
seeing these squeezes of these names that companies that are struggling or teetering on not being around anymore.
Yeah.
They're buying these right now, and this is more indicative of the late cycle of a bull market. This is more indicative of not the early cycle, but the late cycle. We've seen this time and time again. When they start combing the ditches and just buying everything, it's time where you should start thinking about taking profits and other stuff. So it gives me more conviction in my profit taking mentality. And that's where we're at right now. We're not so much like, we're going short stocks and they're going to zero, but we're booking profits. That's what I'm doing, is booking profits on some of the good stocks that, have done really well in the last quarter. They've been big moves. So I think it's time and be prudent to book profits. And this stuff happening like this makes me want to book profits even more.
Yeah, and I think about it this way, right? If we book profits, then we can actually look for pullbacks and not be caught, with the face like, oh man, now we're getting caught in this move, right?
Yeah.
I think that's the important thing sometimes as a bull, is that, it's easy to just stay in the positions, I feel like, and just look to see them keep moving. But I think it's even harder to determine when you want to take that profit and then look for a pullback entry, right? And then you got to be patient, because the truth is, you're going to probably need that pullback to get back into the name. And that's what I'm looking for in a lot of these names. I'm looking for a little bit of a pullback. Is it going to be massive? No, I don't think it'll be massive, but I think we could get maybe, 10, 20% pullbacks in a lot of these names. And that could be a big opportunity for money to come back into the market, right?
Yeah.
And especially
those
in this
dollars back
environment.
to work, you get that 10%, 15% pullback in the overall market. And people think that's absurd to think about, but we've run a long ways.
Yeah.
And the S&P rotation has kept it going higher. We know the rotation, but you just like we've come a long ways. That's just the bottom line. We had key reversals in a number of stocks on the Thursday. It spooked me out of some stocks for the Friday. What's happened here now is we didn't make new highs, though. We got a lot of those losses back, but a lot of the stocks failed to make new highs. Apple did not make a new high after the key reversal there. QQQ's tried, but it's kind of struggling at that high from Thursday. We're struggling at those Thursday highs here, and that is concerning. I mean, there is some stocks bouncing back. You've seen Netflix here in the last few days really have a nice bounce back and snapback rally as the buy the dippers are starting to emerge there. But it's definitely just it's a little feel like you were saying earlier, feels like a little bit of a change in sentiment here.
Yeah, and it doesn't mean like it's a bad
And that's
thing.
healthy.
I think that it's healthy. I would rather stocks pull back than just continue ripping, right? Because let's just be honest, how can we join those parties? We have to stay with the trend and be very, very nimble. And I think that a pullback is what bulls are probably going to need really to keep this market going, right? Because we'll get a little bit of a pullback, you'll wash out some of those long-term bulls, and of course the traders will be ready to step up for the buy the pullback opportunities. We'll see what happens. Like always, we'll be here. Pre-market prep, Dennis Dick, Triple D Trader. Always, you can check us out on Twitter, Money Mitch BZ. We're always here to also answer questions. If you guys have ideas, like you saw Dennis, someone reach out to Dennis today and give him some information. Feel free to do that also. We're always here to help you guys continue forward and get you ready for the market. Of course, pre-market prep, ready to level the playing field for you guys and keep you going on your trading journey. Now to get you guys over to live trading, that's coming up next. We'll see what I can get into today. Still got about 7 swing trades. Took Hyatt off yesterday. Not a bad position. Still have some oil on XOM looking good. We'll see what happens in oil overall. I saw WTI really getting the jump. And I'm keeping an eye out on oil overall. There was some news out there. Looks like the EIA did some revisions in U.S. oil demand and supply, showing that demand is really jumping in the U.S. And that alone could keep driving these oil stocks. Find out on live trading if these oil stocks keep going. You guys will see me trading them. And then, of course, you guys can check out later today. Of course, we got the book club. I want you guys to get over to the book club if you haven't joined already. We have over 650 members now as we keep moving on in the book club. Of course, we're in Market Wizards right now, and I've been working really hard to get through this. This is not a small book. It has a lot of interviews from top traders that have made it in this industry. Of course, if you guys want to check it out, they all do different things in here. And I think one of the things that you get out of this book is you get a lot of tips, a lot of easy tips on how to be in this market for a long time, right? How do you make a career out of trading? I think this book really helps in that case. A lot of the psychological outlooks that you need to do and some technical things to follow by, right? I think it's a very important book to check out, Market Wizards. If you want to check that out, come over today. That's going to be at 7:30 Eastern. And we will have AMD's conference call. I will be tuning into that and streaming it here on Benzinga. So don't go anywhere, team. A lot more for you guys right here on Benzinga today. Now to get you over to live trading, that's going to start up in just about 2 minutes. Don't go anywhere, team. Let's go see what trading we can find today.